So we were doing adjustments. Yesterday we have discussed what is the meaning of adjustment. So simple meaning of adjustment is what? That these are unrecorded transactions. And why these are remaining unrecorded? Maybe due to some error, maybe due to some omission, or maybe due to the nature of the transaction that because no payment is involved in that right now at present, or that's why it remain unrecorded. I have given you few examples of that also. I have shown you how to adjust that adjustment, little bit idea I have given. We have discussed why we are adjusting the accounts, and we are adjusting the accounts for the purpose that they should state true profit and true financial position of the business. For this purpose, we are making these adjustments. Now, these all are adjustments on your screen. So these many adjustments we have to do, and a lot of variants of these adjustments will also be available that we also have to do. So now I am starting from the first point. We have to learn how to do these adjustments, and you will be able to do these adjustments only when you are clear about their meanings and each and everything. So please listen carefully each and everything. First point is meaning. Meaning of closing stock. Yes, please. Can you tell me the meaning of closing stock? What is the meaning of closing stock? Yes, very good, very good. So stock which remain unsold at the end of accounting year. At the end of accounting year, the stock which remain unsold, it is in your godown. So that will be known as closing stock. Now, how I will be adjusting this closing stock? What is the journal entry for recording the closing stock? One thing is that you have done this adjustment already in the previous chapter. Can you tell me where you will be writing the closing stock in the financial statements where you were writing it? Its journal entry is, yes, very good, very good. Not debit side. Closing stock, we were writing on the credit side of the trading account. Closing stock, we were writing on the credit side of the trading account as well as on the asset side of the balance sheet. So journal entry is closing stock account debit to trading account. The point is that because till you close till the year end, you will not be able to calculate the value of closing stock. You will be able to calculate the value of closing stock only after the accounting year ended. On that evening, you will be able to check the closing stock. So after that checking only, when you will do physical verification and you will come to know about the quantity of goods available with you, then you will be able to calculate its monetary value, how much closing stock I am having at the end of my accounting. So that's why this transaction will remain unrecorded in your books of accounts. And now if you want to record this transaction in your books of accounts, so then you have to pass this journal entry, closing stock account debit to trading account. So now this is a journal entry. What will be the effect of this journal entry? Or how it will be presented in the balance sheet or in the financial statement. I must say in the financial statements. How we will be doing this adjustment? See, first thing I told you that what are adjustments? Adjustments are unrecorded transactions. So that's why for recording that transaction, I have told you what will be the journal entry. Journal entry will be this. Now, when I am doing this journal entry, how I will be presenting this journal entry in my financial statements. How I will be presenting this journal entry in my financial statements that I have to run. So now, see, first part is closing stock account debit. So closing stock is your asset, current asset. Closing stock is current asset. So it will go to balance sheet asset side. Yesterday, I also made you clear why we will be adjusting any adjustment at two places in the financial statements. Do you remember that? Yesterday I explained you why we will be adjusting any adjustment given in the question outside the trial balance. We will adjust that adjustment at two places in the financial statements because each and every journal entry will affect two accounts. Like here, it is affecting closing stock account and trading account. It is affecting closing stock account and trading account. So then the second part of the entry will be that closing stock. It is just like a ledger posting. Closing stock will go to the credit side of trading account. Yes, please. So first adjustment I discussed with you. If you need any clarification regarding this adjustment again, however, this we have done in the previous chapter also, but not in that much detail. So you can ask again whatever not clear. I have written many points there, and if you are clear, let me know that. First thing, the meaning should be clear. The meaning is that the stock is remaining unsold, and we have calculated its monetary value now. So after calculation of monetary value, we have to pass this adjustment entry. This is called adjustment entry. And due to this adjustment entry, how it will be presented in the financial statements? Once it will go to the asset side of the balance sheet, and second time it will be presented in the trading account. Yes, please. Next question is, if closing stock is given in trial balance, if closing stock is given in trial balance, अगर trial balance में closing stock आपको given है, then how you will be presenting this closing stock in the financial statements? If it is not given in the trial balance, then it will become an adjustment. So point number A to F are regarding adjustment treatment. Now point number G is that if somehow closing stock is also given in the trial balance, then how you will be presenting this closing stock in the financial statements. Generally, it is not recorded in the trial balance, but sometimes you may get closing stock also in trial balance. Sometimes. Generally, it is always outside the trial balance. Now, you have to decide its nature, whether it is personal account, real account, or nominal account. So, closing stock is the name. No, it is not the name of any person. It is not representing any person. So, it cannot be a personal account. Closing stock is not your expense. That's why it is your real account. It is the property. It is just like a property lying with you. You will be converting this property into cash within few months, within few days in fact. So that's why it is a real account and it will be shown on the balance sheet asset side. So you should be clear about both treatments. When some information is given in the trial balance, then how we will deal with that. And if the information is not given in the trial balance, means if it is given in the adjustments, then how we will be dealing with that. Okay, now coming to the next adjustment. Now, first thing is meaning of outstanding expenses. What is the meaning of outstanding expenses? Yes, please tell me the meaning of outstanding expenses. Yes, very good. Yes, very good, very good. Okay. So, yes, okay, I will explain. Yes, okay, well tried, well tried. At least you tried. So, expenses, it can be also called expenses due but not paid. Like salary, we have taken the example yesterday. Salary was due, but it will be paid in the month of April. Your employees have worked for the month of March, but you have not paid the salary for the month of March till 31st March. On 7th of April or on 1st of April, you will be paying that salary. So because our accounts are prepared till 31st March, on that very day, the salary was unpaid. So it will be said outstanding salary. I have to pay this salary within a short span of time. So means the expenses, you can say unpaid expense. Any expense which you have incurred but you have not made payment for that, that will be termed as outstanding expense. Suppose you have hired a property on rent, so then suppose the rent of the March is payable. You have not paid the month March rent month to the landlord, so that will become outstanding rent. Yes, now meaning of outstanding expenses is clear. Meaning of outstanding expenses clear. Second thing, what is the nature of outstanding expense? What type of account outstanding expenses? Yes, very good. Outstanding expense is representative personal account. Outstanding expense is representing the person who to whom you have to make the payment. Outstanding expense is representing the person to whom you have to make the payment. So that's why it is a personal account. In financial statements where you are writing the personal accounts, in financial statements where you are writing the personal accounts, yes, very good. All the personal accounts will go to the balance sheet. Now balance sheet has two sides, asset side and liability side. Balance sheet has two sides, asset side and liability side. So on which side of balance sheet you will be showing outstanding expenses? It is your asset or it is your liability? Very good. It is your asset or it is your liability? Yes, very good. It is my liability. Okay. Now I am saying that outstanding salary is a personal account. And why I am recording outstanding salary? I am recording outstanding salary because I have incurred a salary expense. Because I have incurred a salary expense in the month of March, but I have not paid that salary for the month of March. Again, I am repeating. Why I am recording outstanding expenses? Because I have incurred any expense in the month of March. My employees have worked for me. Their salary is due. So the name of the expense is salary. So what will be the journal entry now? I have to record an expense also, and I have to record a liability also. I have to record an expense also, I have to record a liability also. So the journal entry will be salary account debit. Your expense will be always debited. Salary account debit to outstanding salary account. To outstanding salary account. So now what you have done, you have recorded salary for the month of March as an expense. At the same time, because you have not paid it. Otherwise, if you would have paid it, you would have done salary account debit to cash account. So because you have not paid that salary, you will be paying that salary in the month of April. So that's why you have created a liability here. On 31st March, it is your liability that you have to pay your employees the salary of the month of March. Yes, now the concept is clear. Now the next thing is effect. How I will give effect of this journal entry to in the financial statement. Effect of this journal entry in the financial statements, or how to present it in the balance sheet. How to present it in the balance sheet. So for that, first one will be salaries or expense. If you are debiting salary account, your salary will increase or decrease. Your salary will increase or decrease. Sell if okay, first you answer my another question. Salary is your expense or income? If you are giving salary, it is your expense or income? if you are giving salary, it is your expense or income? Yes, it is your expense. You are giving salary. As a business, you will be always giving salary. Have you seen any business which is getting salary? No. So salary will always be expense for you. So now, what is the rule for expenses? What is the rule of generalizing the expenses? Nominal accounts. Debit all expenses and losses. Debit all expenses and losses. So if I am debiting the salary account, obviously it will increase my salary. It will increase my salary. This one is clear. So it will be added in salary or respective, maybe see, if it is outstanding rent, then it will be added in rent. If it is outstanding um, interest, it will be added in the interest. Whatever the expense is there, in that particular expense it will be added, because we have taken example of salary here, so that's why I'm writing here salary. It will be added in salary. Okay, now in which financial statement you will be writing the salary? Trading account, profit and loss account, or balance sheet? Where you will be writing the salary account? Trading account, profit and loss account, and balance sheet. Out of which these three, where you will be writing? Yes, very good, very good. Profit and loss account. Now in profit and loss account, where you will be writing it, there are two sides, debit side and credit side. Yes, very good, very good, very good. Because salary is an expense, expense will always come on the debit side. You can remember like this. Or because salary is having debit balance, that's why it will come in the profit and loss account debit side. Both ways you can remember. Okay, now this part we have completed of this journal entry. First part we have completed the presentation part. So whatever salary you are recording now, that will go to the balance profit and loss account debit side. In the salary account, you will add that salary. Now coming to the second part, outstanding salary. Few minutes back we have discussed that it is a personal account. Outstanding salary is a personal account. So all personal account will go to the balance sheet. First thing. So outstanding salary is a personal account. It will go to the balance sheet. And because there are two sides in the balance sheet, it is your liability. So that's why it will be shown on the liability side of the balance sheet. Now, if you are getting outstanding salary in the trial balance, if you are getting outstanding salary in the trial balance, outstanding, then how you will deal with it is given in trial balance. Then first you have to decide the nature of the account, whether it is personal, real or nominal. First thing, decide it. It is a personal account. Yes, very good. It is a personal account. Outstanding salary is the personal account, and it will be written on the